I had a buyer whose monthly payment jumped almost $300 right before closing. Not because of the interest rate, not because the price changed. Insurance. There's one thing about home insurance in Virginia Beach that can completely blow up your deal. Even a house that passed inspection with flying colors. Most military families don't find out until it's almost too late. If you're PCSing here in 2026, this video could save you thousands. Hey everyone, welcome back. I'm Megan Luker, a military wife, a mom, and I've been helping families relocate to Virginia Beach and Hampton Roads for over 35 years. Here's the philosophy I live by. Real estate should be built on trust, transparency, and the full picture, shaping your options right now. I make it my job to tell you things most agents skip over. Today is one of those conversations. We're talking about home insurance and why it has quietly become one of the biggest threats to your buying power in this market. Not the mortgage rate, not home prices, insurance. And for military families using a VA loan, this is especially important because your BAH is a fixed number and insurance costs can push your real payment well past what you budgeted. By the end of this video, you'll know exactly why costs have surged, how it shrinks what you can afford, and the hidden claims trap that has blindsided some of my own buyers weeks before closing. Let's get into it. Why insurance is rising. Here's the reality no one tells you at the open house. Virginia Beach and Hampton Roads sit in a coastal zone that insurance companies are watching very closely. We're talking wind events, flooding, tropical storm activity, and storm surge risk. Insurance companies have paid out enormous amounts across this region. And when payouts go up, premiums go up. That's not an opinion, that's math. And it doesn't stop there. Insurance isn't based on what you paid for the house. It's based on what it would cost to rebuild it. Labor is up, materials are up. A roof replacement costs dramatically more than it did 5 years ago. So even if home prices stabilize, insurance doesn't follow. It's tracking a completely different set of numbers. On top of that, coastal and near coastal properties come with additional layers, wind and named storm deductibles, flood insurance requirements, which is separate from your homeowner's policy. And in some zip codes, fewer carriers willing to write standard policies at all. This hits buyers in Virginia Beach, Chesapeake, and areas near the water the hardest, which brings me to the roof conversation, the roof factor. If you're shopping in Virginia Beach, a significantly portion of the inventory was built in the 80s and the 90s. A lot of those homes are on their second or even third roof. Here's what that means for you as a buyer. If a roof is 15 years or older, your insurance premium can jump significantly. Sometimes you won't get coverage at all. Some carriers cover it for cash value instead of replacement costs, meaning if it gets damaged, you won't receive enough to fully replace it. Others won't write the policy at all and require replacement as a condition. And here's the coastal kicker. Proximity to the ocean or bay adds another layer of scrutiny. Homes within a certain distance of tidal water often face higher wind deductibles, mandatory flood coverage, and stricter underwriting altogether. Buyers used to focus on granite countertops and open floor plans. Those still matter, but if you're not asking about roof age and flood zone designation on every single home you're touring, you're leaving a massive variable completely unexamined. And that leads to the part of this video I really need you to hear. The claims history trap. Insurance claims don't just follow the homeowner, they follow the house. When you go to insure a home, insurance companies run something called a CLUE report, Comprehensive Loss Underwriting Exchange. It's a claims history tied to the property address, not the person selling it. So if the previous owner filed 2 wind claims, a water damage claim, and a flooding event in the last 7 years, that history is sitting there waiting for you. The seller moves on, the record stays. Here's why that matters. Multiple claims in the past 5 to 7 years can mean a significantly higher premium for you. It can mean higher deductibles, it can mean carriers refusing to insure the home at standard rates or even at all, forcing you into specialty markets that cost even more. And the brutal part, you don't find this out at the showing. You don't find it out at inspection. You find it out when your insurance agent pulls the report, sometimes a week before closing. I have watched deals get delayed over this. I had buyers scrambling to find coverage at the last minute. I've had monthly payments jump by amounts that completely change what someone could qualify for. And remember, on a VA loan, your lender requires that insurance be in a place before they fund. No insurance, no closing. This is real. It happens. And it's almost entirely preventable if you know what to look for. Monthly payment and your BAH reality. Let's put real numbers on this. And let's talk specifically to military families, because this hits different when your housing allowance is fixed. Take a $380,000 home in Virginia Beach. A few years ago, homeowner insurance might have run you around $1,400 a year. Call it $115 a month. Manageable with a BAH. Today, I'm regularly seeing quotes come in at $2,400 to $3,000 in some coastal zip codes, and even higher. That's $200 to $250 a month just for homeowners coverage alone. And if your home requires flood insurance, add another $800 to $2,000 plus a year, depending on your flood zone designation. Now stack that on a VA loan payment, property taxes, and potentially HOA dues. And suddenly your effective cost of ownership looks very different from the list price. Here's the thing most buyers don't realize. Lenders factor your insurance premium into your debt to income ratio. A higher premium means you qualify for less house. It's not just your budget feeling tighter, it literally changes what you can borrow. For an E6 with dependents, BAH in Virginia Beach runs around $2,100 a month. When your insurance alone has climbed $100 to $150 higher than you budgeted, that gap comes directly out of your pocket, month after month, for the full length of your tour. Over 3 years, that's real money. Here's how to protect yourself. Here's exactly what to do. Step 1, ask about claims before you make an offer. Ask the listing agent directly. Has there been any insurance claims filed on this property in the last 5 to 7 years? If the roof looks newer than the house's age, ask why. If you see signs of past water intrusion, storm repairs, or any remediation work, ask what was filed. You're entitled to this information, and a good agent will get it. Step 2, check the flood zone designation immediately. This is Virginia Beach. Flood zones are not a maybe. They are a reality in many neighborhoods. Before you fall in love with the house, know whether it's in a FEMA special flood hazard area, because mandatory flood insurance can add hundreds of dollars a month to your costs. Step 3, get insurance quotes immediately after going under contract. Not eventually, immediately. The day you're under contract, contact your insurance broker. Give them the address and have them pull the clue report and run firm quotes, including a separate flood insurance quote if applicable. You need to know what insurance actually costs on that specific home before you go too deep into the process and need to pivot. No surprises on a payment, no scrambling at a closing, no changing your debt to income ratio with 2 weeks to go. Because the non-negotiable is this: lenders require proof of insurance before they fund the loan. No insurance, no closing. It's that simple. Virginia Beach is still one of the best places to buy as a military family. The market here is uniquely stable because of the military turnover. Values hold. But the era of low predictable ownership costs is shifting. Between insurance increases, flood zone considerations, and the real cost of maintaining a home in a coastal high weather event region, you have to underwrite the full cost of ownership before you fall in love with a list price. The purchase price is the starting point, not the whole story. The families I see thrive here aren't the ones who just looked at the mortgage payment. They're the ones who ran the full numbers: mortgage, insurance, flood coverage, taxes, HOA, and made a decision based on reality. That's the move. If you're PCSing to Virginia Beach, whether you're reporting to Oceana, Norfolk, Dam Neck, or Little Creek, and you want a realistic breakdown of what your true monthly payment looks like, including insurance and flood coverage, reach out. I'll walk you through the exact framework I use with every military family, so you're making decisions based on your actual situation, not assumptions or best case scenario numbers. Book a Zoom call with me using the link below, and I'll give you clarity before you even go under contract. And if this video helped you, subscribe. I post weekly, breaking down Virginia Beach neighborhoods, PCS decisions, and what military families need to know before moving here. This is Real Life Virginia Beach, and thanks for watching.